What is the new construction forecast? Are you curious about what the future holds for new construction in real estate investing? Let's break down the new construction forecast for 2025 and see what it means for you. The forecast suggests a cautiously optimistic outlook, with growth rates expected to hover around 3% or less. This indicates a market that is somewhat limited by affordability issues, high mortgage rates, and cautious buyer interest. Currently, the supply of new homes is higher than in previous years. In fact, the number of new homes for sale has reached levels not seen since the mid-2000s. There are also more speculative homes being built, which are homes constructed without a committed buyer. This increase in supply means that new construction will not be as much of a limiting factor in 2025 as it has been in recent years. However, it is important to note that overall housing inventory remains tight compared to historical levels. This tight inventory keeps upward pressure on prices and limits options for buyers. On the demand side, demographic trends are still supporting new construction. Millennials are a key driver of demand for new homes, particularly in rapidly growing areas in the Sun Belt and Western regions. Baby boomers are also contributing to this demand, particularly for single-level homes and active adult communities. Additionally, Generation Z is showing interest in multifamily housing, including build-to-rent communities that offer flexibility and lifestyle appeal. These demographic factors provide a stable foundation for demand, even with short-term challenges like high interest rates. Speaking of interest rates, mortgage rates are expected to remain elevated throughout 2025, mostly staying in the mid to high 6% range for a 30-year fixed loan. This level of rates continues to challenge housing affordability and may dampen some buyer enthusiasm. However, it is not expected to lead to a severe downturn in the market. Housing inventory is gradually improving, but still remains below the levels needed for a balanced market, which supports ongoing demand for new construction. In the commercial real estate sector, including residential development, supply shortages are expected to worsen in many in-demand markets. This is due to factors such as rising construction costs, inflation risks, and higher debt financing costs. These challenges may limit new construction activity or increase development costs, which investors should keep in mind when assessing opportunities. For real estate investors, the new construction forecast suggests that opportunities do exist, but careful market selection and risk management are essential. Markets with strong population and job growth, especially in Sun Belt metropolitan areas, are likely to see tighter supply-demand balances. This can lead to more stable occupancy and rent growth in multifamily and for-sale housing. Investors should pay attention to regional differences, rising construction costs, and financing conditions that could impact project feasibility and returns. The new construction forecast for 2025 indicates modest growth supported by solid demographic demand but tempered by affordability and cost pressures. Supply is improving but remains tight, and mortgage rates will likely keep buyer activity cautious. Investors focusing on high-growth regions and multifamily or build-to-rent sectors may find more favorable conditions amid these market dynamics.